Hello, I'm Donald Leggett and welcome to this edition of Share Views, brought to you by London South East. My guest today is Paul Milcreast, mining analyst at Hardman Co. And today we're discussing the investment case for lithium, as well as looking at one of Paul's client companies, International Lithium Corp. Welcome, Paul.
Thank you very much.
We've not had you in the studio before, so it's lovely to see you.
Thanks.
Now, let me kick off by asking you to explain who Hardman Co are and what you do as a mining analyst.
Okay.
What does your job entail?
Okay, so Hardman Co is a sponsored research house. The company was set up more than 20 years ago by a guy called Roger Hardman, who was the top-rated small companies analyst at James Capel for many years. And he had the radical view that he could get his corporate clients to pay for research if they felt there weren't enough brokers writing about them, and if they felt that the quality of the research that was being written was insufficient. So that's what he started, and then little did he realise that with regulatory changes like MiFID II, etc., that's been very positive for the development of the sponsored research sector. So at Hardman, we've now got about 50 clients. I'm the mining analyst. This is a relatively new sector for Hardman, and what we're looking for is to find companies that have a very solid story where we feel that the investment case is not really being made sufficiently well so far.
Okay, so today we're going to talk about lithium. You're going to add to the sum of our knowledge, because I'm not sure how much our audience actually know about lithium. So, what are the main industrial uses of lithium, and what factors are driving the market?
Okay, so historically, the uses of lithium were relatively minor, actually. So it was used in things like ceramics, it was used in metal alloys in the aerospace industry, it was used, strangely enough, in the medical field, combating bipolar disorder, depression, etc. But then everything changed with the development of rechargeable batteries used in mobile phones, iPads, laptop computers, etc. But that really pales into insignificance now, because the major driver is obviously electric vehicles and lithium-ion batteries. And if you take 2017, about 1% of the global vehicle market was electric vehicles. Now that's expected to grow to something like 15% by the middle of the next decade. In 2017, lithium demand was something a little over 200,000 tonnes a year. By the middle of the next decade, depending on who you ask, that's going to be something between probably 800,000 tonnes and 1.2 million tonnes.
But it sounds good news for producers and suppliers. I learned several things from a recent note. So I read your note with great interest, and I learned that electric car makers are scrambling to secure lithium supplies. Producers are keen to find new sources and are buying them up. Yet, and the disconnect, as you put it, is that the price is falling in China and financial markets are largely ignoring lithium.
Yeah.
So what's it all about?
Yeah, well, I think the financial markets, and I understand that, have been very focused on the spot prices of lithium hydroxide and lithium carbonate into China. And they're seen very much as a bellwether. And having trebled in 2015-16, those prices have roughly halved in 2018. So you can understand the reticence of investors, but I think a few things have changed. So firstly, even though the Chinese spot prices fell very sharply, what was interesting was that contract prices in the rest of the world have actually been on a steady and rising trend. And the fall in the Chinese spot price has actually, it not only has stabilised, but it's begun to move up slightly recently.
Has it really?
Yeah. Now, the second thing is that at the end of last month, the CEO of Orocobre, which is a big lithium producer, he said to investors that, in his view, the market psychology was beginning to change, and he felt that the backdrop to price negotiations in October was better than it was in September. And then all of a sudden we saw a flurry of corporate activity where corporates were jumping over themselves to basically secure long-term lithium supplies. So in the auto sector, we saw BMW and Tesla tie up deals, and we also saw LG Chem, which is a battery maker, tie up long-term supply deals as well. So I think that the market is beginning to pick up, but we are seeing very little sign of it so far from an equity perspective. And I think what investors are just holding out for is a little bit more confidence that we've got a genuine change in trend, which I think is beginning to happen.
So clearly a change in trend is exactly what we're looking for. At what point does demand exceed supply? And that's the crucial bit.
Well, that's right. So
are we calling the market now?
Yeah, well, supply and demand is very snug at the moment. I don't think it's broadly balanced. But I don't think anybody would necessarily disagree with that. The worrying thing from the investor's perspective is that there was a consensus view that because of all the additions of supply, that what we would see was significant oversupply as we went into the early years of the next decade. Now, that view is beginning to change. So we've had projects being delayed, we've had ramp-ups of new capacity taking much longer than expected. And then we've seen...
Which, to be fair, is no great surprise. It's great in theory to get things out of the ground in 5 years, in a 5-year cycle or a 2-year cycle, whatever. But the reality of doing it is far harder.
Well, it is, and anybody who has much experience in the mining sector knows that the lead times are very long. These are very, very complex in many cases projects and facilities that are being brought on. So this is quite typical, but it takes time to change a consensus view. So what we've seen, for example, Roskill, which is one of the leading industry consultants in the market, they did a presentation to the LME recently where they've totally changed or they're totally going against the consensus view. So they're now seeing a shortage of capacity in the early part of the 2020s, and that shortage only getting worse as you get through to the middle of the decade.
So give me the figures for electric vehicle growth as you understand it.
Okay, so it's the growth factor is going to be something like 15 times maybe. So you're going to go from 1% market share to something in the region of 15. And that's a growing industry as it is anyway. Last year there was something like 3 million electric vehicles worldwide. So that is going to ramp up very, very significantly. I think one of the problems with, or one of the difficulties faced by investors is, what we are trying to do is plot exponential growth curves, and that is fraught with difficulty.
Absolutely.
So just give you a little.
You're trying to look into the future.
Well, you are, but it's not. This is not steady growth. This is exponential growth. And give you an example on this. So in the 1990s, McKinsey made an estimate of what they thought mobile phone penetration would be, looking out a decade or so. They were wrong by a factor of 125. In terms of underestimating it. Now, I'm not saying we're going to have the same situation in lithium and electric vehicles, but what I'm saying is that you've got a lot of factors lined up in favour in terms of the auto industry is all for it, and the governments and the regulators are all for it, and there's a lot of weight being pushed behind this growth.
Okay, let me turn to China and their influence on the lithium market. So what role do China play in lithium?
Well, it's pervasive to an extent. So if you look at last year, China accounted for something in excess of 60% of global electric vehicle demand. They are determined to eliminate internal combustion engines completely. They haven't given a specific time horizon, but that's where they're heading. And the expectations are that China will account for in excess of 50% of global electric vehicles really through any forecast period you can think of for the next 10 or 15 years.
And they also want to secure a supply of lithium because of their interest in electric batteries.
Well, that's right. So you can take an example, so Ganfeng, which is the largest Chinese lithium supplier. So their history was they were a midstream producer. They were selling lithium carbonate, lithium hydroxide. Now what they've done in recent years, in response to the difficulties with the availability of lithium supply and swings in prices, is they've adopted both an upstream and a downstream strategy. So they've moved upstream, taking investments in upstream lithium brine and hard rock producers. Downstream, they've got into battery manufacture and recycling.
In terms of listed companies around the world specialising in lithium, is it possible to put the market in context? I'm talking, are there lots of AIM-listed and TSX-listed lithium suppliers? Are they all that size, or are there a few more Ganfengs?
Yeah.
Put it in context for me.
Sure. So historically, you've had a relatively small number of very large players in the sector. So it's really been an oligopoly. So if you take, for example, the top 5 producers, so SQM, Albemarle, Ganfeng, Tianqi, and FMC. In aggregate, in terms of lithium carbonate, they're probably about 70% of production. And behind them, is a tail of smaller companies. But obviously, given the growth prospects in this sector, it has brought in, more investment, more companies, and we've seen quite a number of them that are listing on AIM and the TSX over in North America.
Indeed, and you're working for one of them. So this is, I suppose, an opportunity for you to talk about Canadian-listed International Lithium Corp, which is an interesting company, preparing to mine in Argentina and explore in Canada. Tell us more.
Okay, so we took on International Lithium in April of this year, and what that followed was some very radical change in the company. And it was because of that radical change we were prepared to take them as a
change
client.
of management, new approach, basically.
Yeah, so what you saw in March, you saw the appointment of a new chairman and CEO. He sorted out the operational difficulties at the company. He raised several $1 million in new funding. And he restructured the Canadian operations, and he essentially rebooted the relationship with International Lithium's strategic investor, which is the Chinese company Ganfeng, which we just mentioned.
So the focus in Canada now is firmly on Raleigh Lake. So why are the prospects good at Raleigh Lake?
Okay, so Raleigh Lake is a hard rock spodumene deposit in Ontario. The exploration work that's been done so far has shown that there are intersections of lithium bearing rocks over hundreds of meters, and that it's open in all directions. So there's still a lot of potential there, and the company has been adding to its exploration acreage. What is also interesting is that if you look back at the exploration work that was done historically between 1993 and 99, and then in 2010, what the company noticed was that there were geological similarities between the Raleigh Lake deposit and the Tanco mine, which is west of Raleigh Lake, which is owned by the Cabo Corporation. Now, Tanco is a very storied, famous mine. It's actually the largest cesium-producing resource in the world. Accounts for something like 75% of the world's cesium resources. But the mineralization is not just cesium, it's lithium and tantalum as well. And this is a very thick, continuous, shallow-lying deposit. And if you look at the geology around Tanco, what you noticed was that the mineralization was contained in what's known as gabbro intrusions, that they were in narrow dikes, and that there are similarities with the Raleigh Lake prospect, and that is why the company, International Lithium, basically has decided to focus all its exploration resources in Canada on Raleigh Lake going forward.
Now, that relationship with Ganfeng, how would you characterize it? Is it a good thing, or is it a difficult thing? Is it positive for ILC or a tricky thing for ILC?
The way I view it is that it's a key part of the investment case. So, not every small cap lithium developer can boast China's largest lithium company as a strategic investor, not just in the parent company's shares, but it has majority stakes in 2 of International Lithium's projects as well.
And why is it a good thing? Is it good just in terms of the technology that they can bring, the thinking they can bring, and money, or are there other things as well?
I think you've hit on some of them, certainly. So, from a technological standpoint, they are helping to advance 2 of International Lithium's projects, one in Argentina, as you mentioned, also one in Ireland. The second thing is that they may be called on at some point, or they may offer to provide financing going forwards.
And Mariana, is that the most important thing driving the share price for ILC in the short term?
Yeah, I mean that's their core exploration project. It's the most advanced of the projects. Now, what we're waiting for, and I think it will be published in the next few weeks, is the preliminary economic assessment. So we'll wait and see what that looks like. But from a project perspective, it's a brine project in Argentina. It's centrally located in Latin America's lithium belt. And the exploration work so far suggests that this project may be able to punch above its weight compared to some of its rivals. So, for example, if you look at the porosity results, if you look at the specific yield, it's quite likely that you'll see some very good flow rates at this project. Now, as I say, that could help it to punch above its weight.
Paul Milcreast, mining analyst at Hardman Co. That was fascinating, absolutely fascinating. Thank you so much for your time.
Thank you.
Okay, and if you want to see more interviews like this one, please subscribe to the London South East YouTube channel. Thank you very much for joining us.